In this video, I'm going to show you guys the top 5 stocks that I am going to be buying right now. Don't worry about smashing the like button, subscribing, or looking for the Discord and the coaching link just yet. We'll get to it soon. I want to show you guys some stocks that are going to have some pretty rapid growth over the next few months. But not only that, there's several of them that are going to potentially have some big upside in the next week or two during earnings. Let's get right into it. Number 5, AMSC, American Superconductor. Let me show you guys exactly why this could potentially be a huge pick for your portfolio. One of the things we can notice here is that their earnings calls are consistently improving quarter over quarter. But not only that, when I look at their price to sales, it's actually pretty good, 867 million. And then we go into the financials and we divide that by 155 million. So 867 divided by 155 for price to sales, giving us a price to sales of 5.59, which is really good. Anything under 10 is good. Anything under 6 or 5 is really good. Anything under 1 is stellar. So this is really good, 5.59. And because this company isn't extremely profitable or even really profitable at this point, just barely, you got to go off price to sales because there is no price to earnings because they're not profitable. Price to sales gauges the potential of a stock or a company to become more profitable in the future. For reference, Apple has a price to sales of just over 9. American Superconductor has a price to sales of 5.59, gauging their potential as being really good. Whether or not they execute that or not is up to them and only time will tell, but the price to sales is on par. And when we look at their earnings, they're consistently getting stronger. Total revenue is up from 23 million to 40 million, trailing 12 month, 155 million. When we look at pre-tax income, negative 9 million, now they're to negative 2. So they're about to break even on pre-tax income. Their net income, negative 9 to negative 2. EBITDA, negative 8 to positive 1.83. They've already broke into a positive EBITDA, which is very critical and good. But not only that, we look at the balance sheet, we can see that their net debt is negative 89 million. What this means is they're a negative net debt, which means there is no debt. They're sitting on 90 million in cash. That's another great green check mark for me. And when we look at their cash flow, very low at 3 million, but it's in the positive. Free cash flow in the positive, trailing 12 month, both in the positive, and significant improvements quarter over quarter. This pretty much shows me everything I need to see for a company that has potential to grow. And because their earnings has went up consistently quarter over quarter, beating all earnings in the last 4 quarters, it's likely they will beat yet again. And their next earnings is on November 5th, which makes this stock a buy right now. We look at the chart right now, they're below the 100-day average. The 5-day is below the 10-day, which means they're slightly in a downtrend, as is most stocks right now. So I'd be looking to get in around $22, maybe $21.50, sell some puts, but we're running out of time. I really would like to add this to my portfolio now. Number 4, and this pick is going to be well known, and it's AMD. The only reason why AMD didn't make number 1, number 2, or even number 3 is because this stock does have a lot of growth potential, but not as much as the other stocks in this list that I've picked. And before you ask, Corey, why are you not picking NVIDIA? Well, NVIDIA has lots of room to grow, a lot of room. However, because they already own a majority of the market share, they don't have as much room to grow as AMD. They are slowly, it's very slow, but they are very slowly losing market share to other competitors. And right now, AMD is the biggest behemoth in the room trying to slow down NVIDIA and compete. So essentially, there's more favorability for AMD in the market share segment. When someone already owns 90%, they can't go any higher. They're only losing market share over time. So AMD is going to be growing, and NVIDIA is also going to be growing, but slowing down in market share. Essentially, AMD is going to be rising and growing at a faster pace than NVIDIA at some point in the near future. I see in the next year or two, AMD reaching a stock price of about $250 to $300, signifying a 100% or 2x return in the next 2 years. I really see NVIDIA losing a lot of market share to Intel and AMD. And with the fact that Intel has a very high probability of being acquired, and I told you guys this several months ago, and literally right after I made that video, Qualcomm is thinking about putting a bid to acquire Intel. AMD essentially is a great buy for your portfolio. It has great options premium, so I would sell puts to get in, and I would dollar cost average and add this to your position. When we look at AMD, they are not doing so hot compared to the last year. We can see that AMD reached highs of 227, 187, and 174. As we can see from this, we are in a pretty big downtrend, which I've told you guys many times, you buy the dip. And we can see that there is a lot of support right here, right here, right here, right there, and kind of right here. So 145. And this shows us that there's a wedge, a bull flag wedge that's going to break out in January. So if we look at earnings, we got earnings on October 29th, which means the end of January's earnings is what I would look out for. And this has got potential to run. So by the time we get to next summer, I'd be looking for a high of close to $200, signifying a 25% return. I can truly see anywhere between this earnings and January's earnings, anywhere in between here, I could be seeing a breakout in this direction. They have 23 billion trailing 12 month, 5 billion a quarter. Their net income is 265 million positive, trailing 12 month, 135 billion. EBITDA very strong at 1 billion a quarter. Balance sheet, well, look at this, very strong, sitting on 3 billion in cash. This is also very strong, which is why I picked AMD. And their operational activities trailing 12 month is almost 2 billion, and free cash flow almost 1.4 billion, and per quarter 600 million, 440 million respectively. So AMD very good, and they'll only be growing in by comparison to Nvidia. This is why I picked it as my number 4 pick. AMD only gets number 4 instead of number 3, 2, or 1 is because I don't feel there's going to be as much upside as the next 3 stocks per se, but this essentially would be the safer of most of these picks. Before we get into the next stock pick, I've been asked by many people what drives me to help others in the market. And I grew up in a Catholic household. My mom and my dad, very strong Catholic individuals that believed in doing the right thing, helping other people and working hard. My dad worked 90 hours a week most of the time and most of my life. And my mother also held down a part-time job. And they were always kind and giving. And they told me, if you could help others in your life, then you should definitely put effort into doing so. I told myself that I would help others achieve the same success, which is exactly what I set out to do, and it's what drives me every single day. I am seriously committed to helping you grow your portfolio, and I offer a full training course, Discord, and one-on-one coaching. You guys can sign up at any time at investwithcorey.com. Links in the information box below. Let's take a listen to what one of my students, Adam, has to say about my coaching and who I am as a person.
In just a short amount of time, the program that you offer, I've learned so much, and I've changed my entire approach to investing. You know, I'm much more structured, much more safe, and I've seen consistent, profitable growth. I've seen the growth, and it's almost like unbelievable. Like in a market that we're in now, I was still able to consistently grow because you're so, methodical and structured, and you care about each student. I'm here to say it how it is, right? I've made consistent growth. So I started with 15,000, right? I am now at $40,000. Okay. And I'm so proud. It feels, amazing to be able to share this, because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering, because he means so well.
The number 3 stock pick, we are talking about Wayfair. Yet again, Wayfair has earnings coming up. It just pulled back like crazy due to insider selling and a price target adjustment. This is a stock that has a price target between $60 and $80, and right now it's at $45. It's a steal. If earnings meets or beats the expectation coming up in the next week or so, this stock is going to be back in the mid to high 50s. Not to mention, Wayfair is in retail. Retail is going to do better when consumers do better. And with the rate cuts happening, PMI data improving, inflation going down, this is going to be a stock that's going to improve over the next year or two. And in the short term, I really see this stock right around earnings going back up into the $52 to $54, maybe even $60 range, but at least going to $50 to $52, signifying a $6 to $7 move during earnings. So in the next 2 weeks, this will be pretty big. Earnings is for November 1st, which is just 7 days from now. So I would be looking to get in now, because we pretty much have hit a bottom and support on the floor right now, somewhere between 42 and 45, and we're right at 45. So there isn't a whole lot of downside right now, maybe today and Monday. There might be some more downside, but it looks incredible for earnings next week. Wayfair is launching the Welcome to the Neighborhood campaign. They already have a physical store in Chicago, and they're going to be launching another 10 to 12 stores in the next year across the United States. So they're trying to compete with IKEA and Walmart and Amazon and with physical storefronts. They have a $5.6 billion market cap. When we go to financials, they have $11.9 billion trailing month revenue. So we do 5.6 divided by 11.9, and we get a 0.47 price to sales, which is insane. Insane price to sales. Like, this is below 1, which is incredible. Anything below 1 is almost a guaranteed profitable company at some point in the near to midterm. 11.9 billion in revenue, 3.12 in the previous quarter. Profits, 842 million, 3.42 billion. Operating income in the negative. Pre-tax in the negative. So they're working on profitability, but their EBITDA is also up this quarter, 65 million. First time EBITDA is in the positive. They got to get that trailing 12-month up as well, which is the breaking point or the turning point. Total assets, 3.4 billion. Net debt, 2 billion in debt. I don't like that, but EBITDA will help work that out with amortization. Free cash flow, 183 million. That's good. Their operational activities, 245 million. That's good. Trailing 12 month is good, getting better. A lot of room for growth on Wayfair. This is a very good stock to own now at the current price because we can see that we've had some peaks here. From 90 all the way down to 75 and then now down to 45 when we draw this line like so. With the support right here at 48 to 41, we can see somewhere over in April is where the wedge will break. So I anticipate between now and March, as we get closer, this stock could shoot up an insane amount. But this earnings, it could jump up, consolidate here, and then the next earnings jump up again. I anticipate by spring to early summer, we're back somewhere in the $60 to $70 range. My number 2 pick, MO, Altria. This is a stock that has so much growth potential. I'm going to show you guys why I believe this is worthy of being the number 2 pick and beating out Wayfair, but only time will tell. If you guys don't know, Altria is Philip Morris out of Richmond. They are a holding company for vapes, cigarettes, and whatnot. Cigarettes doesn't sell like it used to, but they're into oral tobacco products and other smokable products like vapes and whatnot. And the dividend is great. And look at the stability. It's very stable. When we look at the price to earnings, it's 8.59. This is incredible price to earnings. The dividend is $1 per share, which is $100 every 3 months. And they're $49 a share. So relatively the same price as Wayfair, but $100 dividend. Well, what is their price to sales? Well, market cap is 85 billion and their trailing 12 month is 20 billion. So they have a price to sales of 4, which is really good. Like, really good. Now, granted, not as good as Wayfair, but they have an incredible price to earnings, extremely profitable. 20 billion in revenue over the year, trailing 12 month, 5 billion a quarter. Operating income, 12 billion, 2.93 billion per quarter. Pre-tax, 512 billion, 13.5 in the trailing 12 month. Net income, 3.79 billion trailing 12 month is 10 billion. EBITDA, incredible, 3 billion, 12.71 billion. Balance sheet, net debt, they are 20 billion in debt, but EBITDA is incredible. We look at cash flow, 8.82 billion in free cash flow. The previous quarter was negative 100 million, and they were at negative 75 million in operational activities, but trailing 12 month is 8.98. Year to date, 23%, 1 year, 17%. So it's expected 17 to 25% in the next year, maybe a little bit more. Good dividends and a lot of growth. We look at the earnings. They barely missed in the previous, but the 2 quarters before they beat. We can see just looking at the price since February, you would have got in at 40 and now the price is 49, but you could have essentially sold at 54. This is a lot. This is going from $40 to $54. $15 on 40 is incredible. The 1 year forecast isn't as strong as I believe it is, but this, because of the dividend and because of the strength of this stock and the reliability and the low volatility, this makes it a very good and safe long-term investment to buy now. So here we go, guys. The number one pick for right now of top 5 stocks that I'm going to be buying is number 1, Ally Financial. Now you might be asking, Corey, why Ally Financial and not Bank of America, Citigroup, maybe Wells Fargo? Why are you looking at Ally? Well, the reason is because the previous earnings absolutely crushed. They crushed the earnings, but because their future guidance was a little bit lower than what analysts and investors and institutions expected, the stock went down. But that doesn't mean it was worthy of a price drop. In fact, it was worthy of the price going up. So right now, it is a steal. So let's look at Ally. Let me show you what I'm talking about. In my opinion, the fair value on Ally right now is about $40 to $42. 1 year, we're up 53%. All of this red in the last year to date, 6 months, 3 months, all comes from this drop recently. And it's all related to guidance. But let's look at metrics. Price to earnings, 13.79. Anything under 25 is good. Anything under 20 is exceptional. Anything under 15 is insane. This is very good price to earnings. But what is price to sales? Well, we have market cap at 10.51 billion, and we have trailing 12 month on their income at 16.48, and we divide 16.48 into 10.51. So 10.51 divided by 16.48, 0.63. They have a very similar price to sales as Wayfair, but they have a very solid and exceptional price to earnings. Ally is also in the finance space. It's a financial stock, a bank. And when auto rates get better, and you see the last part of inflation to truly recover is auto insurance and durables and home loans. And with this comes auto loans. And inflation's already falling. It's already down to 2.4% right now, and it's continuing to drop. We have rate cuts. This is going to help Ally. And they already crushed the earnings yet again. And at a discount price like this, and with a solid price to earnings and an exceptional price to sales, we put all this together, and the fact that we're getting more basis point cuts coming up in the next month or two, and next year we're going to have another 50, which signifies 0.75 to 100 basis points between now and the next year. All of this combined shows us that Ally is going to have plenty of room to breathe and grow. This is a stock that I am adding to right now. I already have it in my portfolio. I'm dollar cost averaging. I played it from the previous earnings, and I'm going to continue to add. Not only that, the dividend is really good at 3.48%. For every 100 shares, you're going to get $30 every 3 months. So in 1 year on 100 shares, you are going to get $120 on your $3,500. So this may not seem like a lot, but that included with the appreciation of the stock going up over the next 3 to 6 months or year is a lot of returns. Because I honestly see Ally breaking $40 by the end of this year or beginning of next year in January. And by the time we get to January and March's earnings reports and into the spring and summer, I see Ally being in the $43 to $45 range, maybe higher. That is a pretty big return. Ally is going to stabilize where it's at, maybe come down a bit. And as we get into election time, I feel like it'll start to come up. And as we get through November, it might come up, resist, come back down, retest. And as we get into Christmas and New Year's, we'll be testing the $38 to $40 range. And then next earnings, if it's good, we have a nice run to help push us through. And that's where we could break into the 40 to 42 range. So there you have it. The top 5 stocks that I'm adding to my portfolio right now. And I would not wait. I would act on this in the coming week as the stock market is pulling back. I would buy the dip and start getting into some of these stocks. Pick the ones that you like that fit your portfolio best and start adding, because these are the ones, in my opinion, they're going to have some pretty strong growth in the next 3 to 6 months, and some of them even sooner with the upcoming earnings. If you guys are looking to grow your portfolio, like I said earlier, I would love to help you. If you want to retire early and you're struggling, maybe you have a lot of capital and you don't know where to begin, or maybe you're just starting out and you're a beginner. It doesn't matter. I would love to help you. It's what drives me every single day. I love to help others, and I really want to help you grow your portfolio. It's what I thoroughly enjoy doing. If you show up ready and committed to learn, I show up ready and committed to teach you how to grow your portfolio and have the life that you ultimately deserve. Thanks so much, guys. I will see you on the next one. Take care of yourselves.